Hello, Warriors. How's everyone doing today? Good ECB day to everyone. This is Mario Swan Song. Looks like the euro is set up to decline, although, on days like this, central bank activity, to me, it's a red event, and you could throw your charts away for a bit. I want to welcome our viewers from investing.com. Okay, Blake. All right, I think we'll be able to handle that. So we'll see what happens here. It's my contention and some other team members' contention. It's going to be important what happens if we get this next break, but that there is a dollar top in place and a euro bottom in place, at least for another move to the upside. I still think we can achieve the top of this wedge line up around 114. And I'd look at hard breaks as being a shorting opportunity, maybe down around 110.5, about 70 pips from here. So we'll see what happens. Mario Swan Song might go something like this. Swanee, how I love you, my dear old Swanee. Ever hear that swan song, guys? Hi, Ronnie. Shahab, everyone. Okay, so S&Ps, I want to point something out here on the S&Ps, and I'm looking at this, 15-minute chart, and there is a potential for a 3-drive formation here, this last high. Confirmed. I don't think a new high up around 30.15. So, everyone thinks it's a layup, new highs, But I just want to point out that this high was 30.28 and this high was 30.22, about 30.23, and so far our high on this drive up here is 30.14.5, and we're starting to attack that. I see the same wedge lines that everyone else does that would take you up to 30.30. Here's the bigger one. It's actually on the weekly, because I know some people are looking for 30.55 or so. You just extend the megaphone line up, probably going to come in right around there, 30.55 or so. So everyone's looking for that. I just get a little skeptical when everyone's looking for the same thing to happen, and I'm going to be looking to take a shot up here if we get it on a test of this line, and risk the high of the move at 30.28, just get out of the way, or even 30.22, just in case this turns out to be the second lower high. So, and not for a crash, maybe back to this moving average, and then maybe we launch one more time, just a little shakeout. We have the Fed next week too, so the market's expecting easing. Japanese yen, been kind of a nothing market. I favor the short side here, only because I think that yields, if we get risk off, that yields could still drop. But here's your 10-year. I'm looking for these highs to be taken out, but everything's time frames, traders. So if we get some type of pullback and yields drop, that would happen with a little risk off happening, and US dollar yen maybe heading down to 108. So we're on the verge of writing a blog. Blake, I know you have your finger on the pulse of what's happening fundamentally, and I believe Stell's here to help us cover the ECB. I'm not sure. It looks like we had something, or at least the market was looking for something last night, because we had that this spike here was this, this is a 10-year. I'm talking about the euro. We had a spike last night. So was there news last night prior to Draghi?
Yeah. There was the market PMIs came out, and actually the French numbers were better than expected. That pushed the euro
Okay.
Pushed the euro up towards 111.60. Then the German numbers came out; they were worse than expected, and
Came off.
it just came off
Yeah.
immediately because it was released, from what I understand, because I was sleeping, right after those numbers. So the PM,
That was this candle right here.
yeah, it was like it
All right.
was, immediately afterwards. So
Okay.
that's from what I understand. And anyway, yeah, it was it squeezed out a few people, and then yeah. So this 15 minutes later, actually, when the German numbers came in a little worse than expected. So.
You any expectations that you have from Draghi's last appearance, his last concert?
None really. I really don't. I think he's going to. I don't think there's a lot of expectations for the euro. What the ECB pushed for and has been pushing for, and Draghi's been pushing for, specifically, is fiscal stimulus. And I think that the ECB is basically saying that they're done, and economies like Germany, for example, or maybe France, need to step up and provide some fiscal stimulus. And the best country suited for it right now, based on their trade surplus, would be Germany.
Yeah.
So
Steve said there was some kind of law. I brought that up, that I thought there was going to be some fiscal stimulus coming out of Germany, and said they're, I don't know if it's their flashbacks to the Weimar Republic, what rationale he gave, but why can't they spend some money on infrastructure?
I don't. I think they're warming up to the idea. So I don't. I don't know why they couldn't.
I think they're going to.
Yeah, I mean, that would be a big swoon for the euro.
Yeah.
If that's the case, but we haven't seen any concrete evidence of that, and we're not going to get that today, not during the ECB meeting. So, I think some German fiscal stimulus would definitely push the euro a lot higher than where we're currently at.
Maybe the euro's a lot higher, anticipating that it's going to happen. If people are going to wait for an announcement from the federal government of Germany, I think they're going to be pretty late on the move. How about you?
Yeah, well, I don't know. If there's one thing that could really, in my opinion, move like equities at this point, would be some sort of stimulus package from Germany.
Okay.
But that's just that would be my opinion. I don't but as far as today goes, we're if we just get evidence that the ECB is really not going to act and they're not going to do anything, I just really don't think the euro is going to move a whole lot. And
your bias is still that a dollar top is in the making, euro bottom's in the making. We've had a nice pop. Are you looking or leaning towards buying a pullback in here?
I'm already long euros.
Okay.
Sorry, I'm already long.
You don't need a pullback.
No, I don't need a pullback. Well, no, I don't want a pullback. Technically, what we've held is we held the 38% retracement. We're trying to play this flag pattern out, but the German PMIs just did not play ball overnight. You can see here, here's the PMI numbers. The flash or the French numbers came in at 12:15 a.m. my time. And then at 12:30, 15 minutes later, the flash services PMIs from Germany came in, and then the Eurozone numbers came out half an hour after that. And that's just, kept the pressure on the euro. And like I said, the euro is just waiting for the ECB. And I doubt we're going to get any fireworks for Draghi's, last swan song, as you put it. And I don't know if he's going to sing.
Yeah, someone said, she doesn't know the song. Well, it was Al Jolson singing it in the 30s when I was just a kid. So I remember it, but that's a song. And also Forex Gal, come on, you don't know who Draghi's replacement is? Madame Lafarge from, what was the name of the book we had to read? Tale of Two Cities, Blake. This is the best of times and the worst of times. No, it's Christine Lagarde, but I believe it was Madame Lafarge in the French Revolution. So it's going to be interesting to watch
Christine Lagarde's going to be,
restructure everything.
Everybody's thinking she's going to be extremely dovish, and I'm reluctant to believe that, not because I'm bullish the euro, and this has been my feeling, since since I found out that she's coming. Everybody's like, oh, she's ruined everything she's touched, and she's driven everything down that she's touched. But I don't know if she's going to, as taking the helm of the ECB, if she's going to be necessarily as dovish as everybody thinks.
Well, coming from the IMF, she definitely knows how to restructure countries, right, and debt. Yeah, and there is a need for that in Europe. So I think that's part of why she got selected, is some type of restructuring that's going to happen in the ECB.
So
what do you think, Still?
I think she's a very good politician and very good with politics in general. So she's a very good person to take over. But she has said that the lower bound of rates has not been reached. So she is opening the door for negative rates. I mean, it's always been open, but she just confirmed it. So I think Blake is right when he says that, everybody thinks she's going to be very, very dovish, but I don't think she's going to be hawkish. Let's put it that way. So
that's true. But you got to see how she, is it December? Is it December meeting? Is that the next meeting?
I think so, yeah.
I think it's December. So
I kind of have a crush on her, guys.
Well, she's at least 30 years you're younger, so I don't know. Considering you were born in the 1930s.
Yeah, to me, she's a chick. All right, buddy.
She's a chick. That's funny. Oh, jeez. Anyway, hey, we have a surprise guest today. Greg is going to be popping in after the ECB. So what I want to do, because the ECB meeting is in literally like 18 minutes, or the press conference rather, and I'm going to have to show just the euro when we get there. I'd like to review some of the other major currencies, but Stelios, do you have any comments that you want to make before I just kind of breeze through some of the pairs before, because Steve's not here? So
yeah, sure. I mean, first of all, you said Draghi's last meeting, and I think we all have to take a step back and look at what he's done. And in my opinion, I think he has done a very good job. I mean, he said whatever it takes when the time needed it, and he did whatever it took, and took the EU, well, the ECB through the toughest recession, let's say not recession, but crisis that Europe has seen the Eurozone since its inception. So he's done very well in that respect, and deserves credit. People say a lot of things about him, but I think he did a pretty good job. The other thing I wanted to mention very quickly is that France, you were talking about France before. Did you read that they actually revised their budget target
No.
due to, and I quote, exceptional circumstances? They haven't, from what I've seen, they haven't actually said any numbers, but I think we all know which way they're going to revise it. So like Italy and France now, they're revising stuff lower or more negative. So it's not very good, I don't think.
So how do you feel about the euro overall, or is it more a dollar story?
In the medium term, I think the dollar is going lower, but I also think the euro is also going to find some trouble, because the eurozone is not, it's not doing well. The German economy is lagging, and we have things like Catalonia now. How should I say it? There's unrest, and Europe is a very peculiar thing, because it's made up of all these countries which are quite different, and they've been joined in this union, which was always difficult to pull off. But in terms of economics, it seems to be turning lower. So I think the euro is going to have some trouble, but I think the dollar is going to be worse off. So in terms of the euro dollar, if you tell me to buy it or sell it now, I would probably buy it. And a lot of people will be saying, "Oh, what are you saying? This doesn't make sense." But I think the dollar has more downside than the euro going forward, say 12 to 24 months.
All right. Well, you're you know, a macro guy, and you like to think a little bit longer term than everybody else. So I appreciate your thoughts. Now, what I'd like to do, since you know all's quiet on the what, well, let me ask you. So about Brexit.
We haven't had anything last night, so there's not much to report. Thank God for that.
Thank God for that. All right. Well, you know, the cable's actually pretty quiet as we're consolidating here. But let me go through the majors really quick before the ECB
Sure.
presser. So, you know, as far as the euro goes, we've got, you know, this is the bull flag pattern. We tried to, you know, rally overnight. You know, obviously the German numbers and then the broad-based Eurozone numbers kept a lid on the euro, but you know, it's still progress. And you know, technically speaking, we had a pullback to the 38% retracement of this last move. You can see this fib right here. Let me grab it really quick. Can't grab it. See if I can grab it. Oh my gosh, hold on. There is some unlock. There we go. All right, so here we go. All right, so you can see this pullback lasted to the 38% retracement, and so as long as this 111 level can hold, the euro is still constructive technically. I know we had the spike up here, but you know, I'm more focused by the end of the day. So whatever happens by the end of the session is going to be very important for the euro. You know, stay above 111, and you know, the bulls still are holding. Now remember, this is coming out of a big descending wedge. This is a major descending wedge. We broke out, and then now we're just kind of holding the broken trend line. And so, like I said, while we're above 111, you got to look at it constructively at this point. But we really, you know, in order to get the bulls really moving, you need to get a breakout above the highs, which would be a 111.80, and that, you know, that then, you know, puts this 113 into play, which is still, like I said, it's still doable, but you know, price action right now doesn't look so good. But you know what, it didn't look great yesterday either, as we were coming down towards 111.05, and then we bounced. So now the cable, very quiet, just a nice consolidation. And you know, the thing about the pound, and I have to mention this about the pound dollar, is that despite, you know, Boris Johnson losing, you know, the timeline vote, the pound still is holding up pretty well. And you guys gotta realize that a no deal Brexit at this point in time is really off the table, and that's what's really supporting the cable. Do we have any definitive knowledge about any deal? No, we don't. But from what it seems right now, it seems like a no deal Brexit is off the table, and that's what's really supporting the cable on dips. And it's been a very shallow pullback considering the rally that we've seen. So you know, I'd be a little nervous if I was, you know, trying to fade this strength that we've seen in the pound. All we've done is we've just worked off a lot of overbought signals, and now we're resetting. Relative strength is resetting almost across all time frames. So keep that in mind as we move along. You know, the Aussie is, you know, as well, you know, this bullish move that we saw in the Aussie the last week, the pullback has been to a 38% retracement, just like the euro. You know, if these 38% retracements hold, that's very indicative of a continuation of an uptrend. Whenever I try to draw, like, let me just I'll just do the Aussie dollar, and I'm going to do a chart that I never really drawn, and let's just delete everything and let's move this out of the way, just to where I can draw on it. All right. So when you get a move in the market and it moves up and then you get a move down, okay, let me just pull up a fib level. Let's do this. Okay. So if we only pull back, okay, we only pull back a 38% retracement like this, that tends to mean that we're going to get a continuation. If we pull back to a 50%, like this, that also could mean a continuation. If we get a 618, then we tend to bounce from there, but what happens is the risk now is more like a 50-50 that we can get a consolidation type of move, or a 78% retracement is very similar. You tend to get consolidations after that. So what I'm trying to say here is, if it's just a 38% retracement, that's overall a fairly bullish sign for these pairs. Now you got the Aussie, you got the Euro, 38% retracement. You got the Kiwi, which is very tight consolidation after a bounce. And in the Kiwi, you got to watch, because this is a pennant, right? If this actually breaks higher, we're gonna see a broad-based recovery. The dollar Canadian can't get out of its own way. We've got a bearish wedge here. The dollar Mexican peso is trading very heavy, which it's trading on a very big weekly trend line. And I'll do this just so you guys can see it. The US dollar Mexican peso, I've tried to play this thing on the long side, and it's been a real tough trade. I mean, we're sitting here just consolidating at a big triangle. So I mean, if the peso breaks down, I don't know where this thing's going to go. I mean, well below 19. The Swissy, okay, the Swissy's bounce has been limited to a 50% retracement thus far. And the US dollar Norwegian krona looks like it's finally running out of some steam here. And I should probably redraw the US dollar Norwegian krona a little bit, because this topside break was more of a false breakout, and then that's brought us a bit of a reversal. The US dollar Swedish krona is also, and by the way, and Stelios might be able to talk a little bit about this. The Riksbank met last night, and they met last night. Did the Norges Central Bank meet?
Yep, Norges Bank met. They kept rates unchanged. So did Riksbank. But Riksbank have left the door open. Actually, they've indicated that a hike is coming.
Yeah, in December, right?
Yes. I mean, remember, they're still on negative rates, and there's probably not enough justification anymore for them to remain there. Negative rates are supposed to be extraordinary measures, and they should go theoretically pretty quickly back to flat. But yeah, that's what they said. Norges Bank gave us nothing, absolutely nothing. That's why the kroner is barely moving. Actually, no, it's slightly lower, but really we didn't get anything new from them. So,
but you can see how the Swedish krona. I mean, it's actually threatening a break of this support here. I mean, this is, and
yes.
I should probably redraw this. These fibs are old. I haven't traded the Swedish krona in a while, so I haven't followed it as close as I normally would. But as you can see, this is like the 50% retracement here, and we're probing some of that support. I think the US dollar Swedish krona is at risk of a continued breakdown. If the euro starts to firm up, following the ECB meeting, this could be a big failed breakout of the US dollar Swedish krona. We hit new highs, and then we start hitting new lows. That's typically not a very good sign.
You should target 925 or something like that straight away, I think.
Yeah. I mean, yes, I think the risk of a move back here to 925 is relatively high, especially if the euro starts bouncing. So when you look at all these dollar pairs, like I alluded to in the week ahead video on Sunday, it's less about the cable now, but it's more about the rest of the dollar pairs. I mean, look at what's happening with the euro, what's happening with the Kiwi, what's happening with the Aussie, what's happening with the Canadian, what's happening with some of these Nordic currencies. The US dollar Japanese yen is always it's doing its own thing. The one thing I have to note regarding the the US dollar, Japanese yen. And this is something that I was thinking about yesterday as the yen pairs had a nice rally. The one thing that really sticks out in my mind is, and you just probably saw gold go back to positive. Gold is still in a very bullish formation. And if gold breaks higher, you know, in 1500, you can see I actually have an alarm set for 1504, which, you know, I just wanted it above this trend line. I can actually adjust that a little bit to like 1502. All right. The thing I want to see is a break above these highs, above this 1500 level. We start breaking above that. That's pretty bullish for gold. Now, bullish gold typically will mean bearish the US dollar, Japanese yen, or you know, yen strength, and it can mean dollar weakness across the board. So watch gold and watch silver. I mean, these precious metals, I've been making a case over the last week, and you know, I know my chart of the day, like last Tuesday or Wednesday on our blog, which, you know, if you guys don't go to, it's just a free blog. You know, I outlined how shallow the gold retracement has been, and I think that, you know, the risk is really building for another bullish move in gold. What I was hoping for is a move down to 1450, because I was going to buy with both hands down here. But what might actually end up happening is we break above, you know, we break above 1500, and then we're all going to have to chase price higher, because
Blake,
yeah.
Sorry to interrupt. Just one thing. Something that came through the headlines yesterday and the day before. Not many people have caught on it. Central banks are buying gold again, and Germany started buying gold again, I think last month, for the first time in 20 years or so. That should tell us, that should be a pretty big signal, in my opinion. So, you know, central banks, obviously they don't have the best reputation of getting the timing right. You know, look at Gordon Brown and selling the UK gold at the lows, $200, whatever it was. But, you know, if central banks start buying gold, it should push things higher, theoretically.
Okay, yeah, I mean, that's interesting. You know, gold, I mean, you know, you've been making the argument for a long time, but, you know, they're just mining less and less of it. And, you know, in a period of, you know, continued expansion with monetary policy, we're looking like we're facing QE4 globally, you know, or negative rates globally. You know, where do you turn to? And it's like, it's becoming increasingly obvious that you have to buy precious metals. And I know you've been making this argument for so long, Stelios. You know, it like makes my head spin when I think about how long you've been, you know, like really since I've known you, which has been 4 years, maybe.
Goldfinger, he's the man with the golden touch.
But
that's Stelios.
Yeah, he, you know, and just so you guys know, I mean, Stelios has been really bullish of precious metals, really since probably about 2014, 15 that I've known him. Down here, and he's just, you know, very much a
people
gold,
gave him a hard
gold.
time about it too,
oh, for a long time, because it wasn't going anywhere. And then now, you know, look at Stelios go.
Stelios, man. You know, silver's going to 10. Remember that, Stel?
I remember that. Yeah.
Well, you know, I tell you what, technically the big bases that have developed in gold and silver, I mean, they spell trouble if you're bearish. And so
you sound like Peter Schiff.
I'm taking a break. Don't do that. Don't do that. Don't say that.
I'll be back later, man.
That's horrible. That's, you know, why would you do that? Oh man,
God.
You can't
Blake Schiff.
No, absolutely not. All right, guys. Remember we have the ECB press conference that's starting anytime now. And matter of fact, let's see. Where's my data flash? There's my data flash. We got a little bit of data coming out here.
I'm on the lookout for any big headlines from Draghi.
Yeah. You know, I'll pull up. I'll be listening to him as reluctantly as well, best I can, because I can hear him. We pipe right into the ECB presser from my office, so I can hear a live feed. Let me go over to a 5-minute chart. Here's data flash. Put that over here.
And a second now.
Here's Bloomberg. So you got Durable goods.
Negative. Core durable goods. Just 0.1 worse. Okay, so
Initial
nothing.
jobless claims still, they're not horrible, revised upwards. I've been kind of looking for a turn lower in initial jobless claims to really, signal that, employment's kind of, starting to pull back, which, I've been thinking for the last several months. It's just, it's still uncannily strong. Yeah, durable goods orders, a little worse than expected. Revision up on the a little bit here and a revision down. Nothing to really write home about.
It's a big yawn, yeah.
Yes, it is. And so what I'll bring over right now, this is some Bloomberg headlines. I'll be listening to headlines as they come out, but let me get rid of the data flash, and let's just pay attention to the euro and see what we've got here. I think for the euro to really start to show some life, that we're getting a bullish, kind of indications from Mario Draghi, if he should give us any clues. We have to break above like 111.50. If we. Let's see.
Greg is going to be here in a few minutes, so
Draghi says Christine Lagarde attending Euro Council, blah, 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 blah. She was at the meeting. Oh, here, hold on. Oh, he's speaking. I don't know if you can you hear through the microphone? You probably just hear a little gibberish.
A little bit in the background,
yeah.
Just a little bit, yeah.
That's him broadcasting at the moment. See if the euro gets any move here.
They're going to run purchases for as long as is necessary. I like these vague statements.
All right. Hold on. I'm sorry. I'm just moving things around here.
Christine's there to listen to.
Yeah, she's attending today, of course.
Yeah.
So she's taking over the helm. She should have been there for the last couple months at all the ECB meetings. Okay. It's jarring over on my end listening to him. Like I said, I'm really not expecting anything from the ECB.
Yeah, it's a non-event.
I expect it to be a non-event today.
Yeah.
But you never know. You never know. Okay. So we'll be watching the euro. Greg is going to be joining us in a little bit. So and like I said, regarding the euro, I can't. There has to be something that pushes the euro above 111.50 for me to even think about getting excited about the upside. Flip side to that,
let's see the bonds. That'll do it.
The flip side to that, would be, and I'll pull that up real quick for you. Oh shoot! I just lost his feed. Boons are actually moving higher. The flip side of that is I'd have to see the euro back below 111 to get excited about downside. And, obviously I wouldn't be excited because I would be, I'm long and that wouldn't be too exciting for me. But Boons moving higher.
They're really pressing.
They are pressing higher.
So you need Boons to start heading back down for the next wave. This might be a shorting opportunity in Boons up here.
Yeah. One thing I want to mention about Boons is that the bounce has been really shallow the last couple of days.
Yeah.
I know we're spiking up right now, but we're just consolidating, maybe a little inverted.
I think that's your tell for euro is if you just get the waves right in the Boons, I think you can get the waves right in euro.
Well, maybe that will be
Put
the
them
case.
Next to each other.
Oh shoot, that's what happened. Okay. Sorry, wonder what happened to Draghi's voice, but it's here.
Someone threw some confetti on him.
Yeah. Wasn't that something? I mean, that's something that
He ducked. I don't know about you. I know when you were a Marine that they had drills where they threw live confetti on you guys to see how you'd react to it.
No, they just threw grenades at us. Live grenades, not like live confetti.
Yeah, I wouldn't want to be in a foxhole with anyone who's afraid of confetti. I wouldn't want him in the foxhole.
No, I did actually have we used to do live at the ranges. We do live operations with throwing grenades and stuff. And the worst thing I ever had happen to me is I had some shrapnel fall down the back of my flak jacket and
Burn you?
Burn the back of my neck. Yeah. So,
Yeah. Wow.
yeah. That's no big deal.
It's a pain in the neck.
Yeah, it was a pain in the neck. You're witty for an old guy.
S&Ps, yeah. Well, that's all I can do now. Use my mind. Anyway, S&Ps are coming off a little bit off that 3 driver.
Yeah, they are coming off just a hair, but really.
But everyone thinks it's a
Gold's
layup.
actually
New
at the
highs.
highs of the
I
day.
do too.
I do too.
But
I think
why too many.
Go ahead.
We all do.
I know
That might
that's
be a
why
problem.
you're a little hesitant right now. I know. I heard you earlier, but
I'm taking a shot here at the short side here.
Are you
Long
really?
at new highs.
But look at the very, very shallow pullbacks.
Yeah, I know.
It's yeah.
But if you look at the daily, it's really the second lower high. So, I mean, yeah, it looks like it could break out. I see that. But if they turn it back now and they take out this week's lows late in the week, which is around 29.82, there's a problem in Houston. So just,
we'll keep an eye on it. I have no view of the S&P other than it's
going to go to new highs. That's
Shabab asks, how do I feel about the euro overall? I mean, look, it's bullish. I mean, like I said, it's pulled back to a 38% retracement. As long as we stay above 111, there's no reason to be bearish. That's not saying that we can't drop below 111 today. And at that point, then that point it would be a failed breakout on the euro. But right now, we've taken out the descending trend line. We really this is of a big descending wedge, which is a bullish structure. We still have to take out the 200-day moving average, which comes in around 112. That's been like really the big kahuna, the big cheese over the last last week and a half since the week ahead video. It's really just making sure that we can break back above that in order to turn bullish. Let's see here. Still listening to Draghi. Nothing. I'm hearing nothing that's moving the market. Give me 1 second.
Yen's flirting with that 108.5 level again, Blake. It's been on both sides of it a million times now.
It has been, and it's a huge battleground of the 108.50 level, but just a huge battleground. We've been above and below it by about 20 or 30 pips, and really you'd have to see a move below at this point below 108 in order for the yen to look, the dollar yen to look bearish or the yen to look bullish. I would really focus more on gold, which is, by the way, gold is hitting new highs on the session right now.
Yeah.
If gold continues to hit highs, the dollar yen's probably going to continue to weaken. The euro dollar could firm up. But yeah, watch this gold. We're getting really close, very, very close to this, this 1500 level. We start spiking above 1500 and
we could go back to 1515 or who knows?
Yeah. So let me take a look. I think Greg is here, which maybe he might give you a little bit better indication of. Here he is. Hold on.
He says he's in, but I don't see him.
He was in attending.
There he is.
And,
there he
let's
is.
just see if.
Yeah, I'm here.
Greg, hey, how you doing, man?
I was screaming and jumping here, and no one.
Well, first of all, the good morning or good afternoon, and thanks for being
Wizard.
here.
Hey.
Yeah, and you know, the ECB press conference is going right now. I'm not expecting a lot from Mario Draghi today. I'm not expecting him really to move the market. You know, hopefully with your Elliott wave views, you might be able to shed some light on directionality of where the euro is going to go. Because I'm bullish the euro. That doesn't mean you have to be bullish the euro, but that's my take. And let me point this out, Grega, because this is really important for the listeners to understand this. Grega is our Elliott wave analyst for ForexAnalytix. For those of you that don't know who he is, he's got some great views on the market. And earlier this week, I got asked this question, Grega, about our patterns in play. Like somebody had asked Dale, hey, there's a bullish dollar yen, there's a bearish dollar yen pattern in play. What's up with that? And I had to explain to people that we have different views in the market based on our analysis and the way that we approach the market. And the one thing that I wanted to make clear back when we started ForexAnalytix, and you probably remember, is, your views are your views. Don't let my view alter your view, or I won't let your view alter my view. So the whole thing about ForexAnalytix is combining several different analysis types and trying to draw a conclusion based on multiple analysis types going in the same direction. But there will be many times where, you feel bullish and I feel bearish about some instrument, and that's fine. And it's okay to have opposing viewpoints. And if we do, that should be more of an indication to you at home, or you using ForexAnalytix, that maybe I'm not so sure about this because, Blake's bullish, Greg is bearish, Andre's bullish, Greg is bearish, or vice versa. And so that's why I appreciate your views on Elliott waves, because I think you bring a whole new light to the analysis of all the instruments that we cover. So I just wanted to make that point clear, because a lot of people, will, walk away from today and say, well, Blake's really bullish to euro, but really, how's Grega feel? And so that's why I'm interested to hear what your point of view is today, Grega.
Yeah, sure. Just let me share screen.
Yep. Let me. And by the way, in case something happens, I'm going to be here with Stelios and Dale as well. But in case something happens during the press conference, if some big headline comes out, I might interrupt you. Just giving you some heads up.
Yeah, sure. No
Okay.
problem. Okay, Dale, so how are you? Are you here?
Dale, Coach.
Did you say Dale or Stelios? I'm well, thank you for asking.
Oh, Stelios.
Yeah.
Whatever you said.
Where's Steve, by the way?
He's driving to his beach vacation or wherever he's going.
You don't want to know how he's driving.
Sure, it's very fast.
He's a lunatic.
I don't know how are drivers in Greece, but I mean, I was scared. Okay.
That's funny. When I met Steve in Athens, myself and my sister were in his Alfa Romeo, and he had this, like, it looks like a VW Golf, but it's an Alfa Romeo back then, like 5-6 years ago. And we must have been heading down the Athens city streets, going about 100 miles an hour, which would be what, about 130 kilometers an hour?
160. Yeah.
I mean, he was flying, and my sister was glued to the back seat, scared out of her mind, So yeah, Steve's a scary driver. I've experienced it firsthand.
Yeah, me too. Okay, so euro dollar, as you know, we have seen a very nice move to the downside, looking back from 2018 highs. Now, this move probably came to an end because we have a wedge pattern at the end of this leg. So normally when this occurs, market shifts to the other side with a very strong and powerful move. And I'm not surprised to see this very strong lag that we are seeing right now, because to me it suggests that finally this very ugly and unclear price action, despite lower price action, has bottomed and has completed the fifth wave. So if we are now in a recovery mode, then this recovery should be made by minimum 3 waves. So it means that it should take us, normally when wedge is completed, you may see a reversal all the way back to the starting point of the wedge, which would be here. Okay, at 11.18. But of course, I'm looking also at more minimum, more obvious targets for, let's say, for the next few weeks or months. So my first target would be 1.14. I would be looking for that level, and then maybe would pay attention already to some bearish indications, especially if move into this zone would be made by 3 waves. Okay, so I'm thinking that more upside will occur. I'm looking here also on the 4-hour chart. Let me put it here so that you will see the whole context. So wave A is a motive wave. Okay, it should be made by 5 waves. So I'm looking for waves 1, 2, extended wave 3 can now be in progress, then expecting wave 4, then another push higher into wave 5. Now Blake, I think, mentioned 200 daily moving average. I think this could be very interesting, because maybe we'll see a 5-wave move with wave A, this first wave, right into this moving average, and then we see a pullback. But any pullback, short-term pullback, or maybe even deeper pullback, it will be treated as a corrective wave within this recovery that I think it may take us, as I said, even higher. Now, looking at dollar index, to give you also this perspective, obviously they are very similar. Here also wedge pattern on ending diagonal if you want, with a completed throw over formation here. The most important was for me this broken channel, because it confirms that this lag is finished. So obviously I think that we are headed to the downside. Now, even if we stay in this wedge, I would still assume that more weakness will occur to retest the lower side of the wedge. Okay, so looking at the 4-hour chart, I think that where's the right count here? Okay, I think that we are here in a wave 4. We also, as you can see here, this is very key level when you are tracking an impulsive structures. Okay, these channels are very important to me, because if I see price action trading within channel, within 2 parallel trend lines, then this can mean that we are just consolidating in a corrective channel. But if you see a move out of the channel, like here, with an extended price action, then normally this is a key point for an impulsive decline, not the corrective one. Okay, so wave C would probably bottom here, and you would see market continuing higher. But here, market just broke to the downside, some very nice support levels, which is indication that bears are much stronger. So I think that we are in an impulsive decline, and would be looking obviously for this same trend line to act as a resistance, which already happened a few hours back. Okay, so sessions back. So I would be expecting more weakness, maybe from here, maybe from another retest of 97.70 level, and then drop. Okay, so dollar index in general, or dollar in general, if you want, I think has a more downside potential. Now, also looking at dollar Swiss. Now, this is a weekly chart. It's a mess, okay? I mean, it's a mess if you're not familiar with Elliott waves, but if you're familiar with Elliott waves, then you would probably recognize 5 subwaves within this contracting range, which I think it's a triangle, okay? A, B, C, D, and E. Now, wave E should also be made by 3 waves, so I think there is room for more weakness here. Also, wave E can move for 61.8% of wave C, not wave D. Okay, this is a key level. So 61.8% comes in right there at 9,500, and also you have some swing low, sorry, around that same level. And since we don't see these 3 waves yet in wave E, I'm thinking about more weakness, which makes sense after all if we consider that maybe euro dollar is recovering for that wave B. And then when corrective rise on euro dollar will be completed, that's when maybe we'll see a completion of wave E on dollar Swiss. Looking at the daily chart, now ideal pattern would be maybe here a flat. What is probably the most important is that the first rise is here from the lows was very slow, choppy, overlapping. To me, it looks corrective, not impulsive. So I would assume that we will continue to the downside, maybe already straight from here if euro dollar is going higher from that fourth wave support. So I am also obviously bullish on Swiss franc, and maybe Swiss franc could be some very good option if you want to avoid euro or pound during Brexit unclarity. Okay, so maybe it can act like a safe haven. Now let's take a look on dollar yen. Now dollar yen is higher, and I think it may see even more upside because I can see the 10-year US notes are trading to the downside. Let me just bring this chart on. Okay, so here's the 10-year US notes. I'm tracking a free wave drop from this September high. Okay, now we are in a wave C. Wave C in a zigzag, okay, should send prices back to these levels or endpoint of wave A. Okay, so this is my minimum objective, but normally you will see wave C to be equal in wave A in zigzags, which means probably we can see even deeper prices. But this is my first level. Okay, so as you can see, there's still room for a lot more weakness from current levels. I think that we are just now pausing down here for this wave 4. Okay, for this wave 4, and that we will resume weakness. And now you can imagine where dollar yen could be headed, which is at the bottom of the chart, if this is really going to be the case. Okay, so I'm thinking about dollar yen to reach higher prices. I'm looking here at check here. I'm looking here on a daily at wave C, which obviously could even reach the upper side of this triangular range that we are tracking. Okay, I'm looking into this trend line resistance that could be tested. So in my opinion, dollar yen could, I know that it's trading at a new swing high, but this can be maybe just the beginning of something much more significant. Also, what would I pay attention on is this current wave 4. As you can see, it after the prices broke to the upside, prices came back to this trend line, back to these supports right there. And there you have also this trend line connected from 106.50 level. So in my opinion, this whole zone right there is a very key level. Also, I see 38.2% there, and I see, as I said, the 10-year US notes are trading to the downside. We have the stocks which are trading higher. So I think the dollar yen is quite interesting. But if you're trading, want to be short yen or something in general, maybe you may look some at the cross pairs, which could be even better actually, because as you know, if euro yen is going to the higher and the dollar yen is going, if euro dollar is going higher and dollar yen is going higher, then obviously euro yen will do even better. So with that in mind, we can take a look at CAD yen. Actually, I'm still long CAD yen, and I put longs in play after I saw this breakout, okay, which to me suggests that this lag can be finished, that we are headed even higher out of this corrective channel, that we are in a new bullish phase. I know that from a Elliott wave training perspective, now this one is missing here, this could be wave E. From a trading perspective, from an Elliott wave view, this may not be the best wave count to trade, okay, but that's why always before I issue a trade, I always look at intermarket analysis. So because I saw dollar yen moving higher into wave C, because I saw that the dollar index is coming down, okay, I was quite confident that actually dollar CAD will also weaken, which will actually on the other side make CAD yen very strong. So those dollar yen in particular and 10-year US notes was a key level why I still was looking for long on CAD yen. So I was looking for long actually in this wave 4 here in the middle of this wave 3, and so far it's progressing very nicely, but we are now in a 5th wave. Okay, so I also send out this update on this trade and put the stop loss on 82.95. Okay, because after all, we spiked to a new high, so we are in a fifth wave. I'm not sure where fifth wave will end, but definitely if once you are in a trade and once you want to catch a fifth wave, you want to go out of the trade or look for reasons to go out once fifth wave reaches a new high. So in my opinion, it's very important to protect your profit and just leave to the market if there is maybe something more. Okay, there's always possible extension. Now, very nice and interesting target area is definitely here at 83.50 up to 83.80. Okay, that's where I would be looking for this wave 5 to complete this whole cycle. And then we see a new pullback and maybe a new entry after a deeper free wave retracement. Just a second to grab some water.
By the way, guys, while Greg is getting a drink of water, the euro dollar is trading above 111.50 right now. But this seems to be more of a dollar move, not just a euro move. It's the dollar across the board. The Canadian's breaking down, the peso's breaking down, then NOK is breaking down. We're seeing a dollar sell off across the board, minus the yen. But sorry, Greg, I just wanted to mention that.
Yeah, sure. Okay, so it looks like that this move that Blake just highlighted could be in a fifth wave. So watch out for a push to new low, then a bounce, and then more weakness after a pullback. And I think that this is a actually very nice looking pattern, and will look even better and even more bearish if we see this push to a new low for a wave 3, because then we would have first leg already looking extended since the market turned down from start of October. I mean, I'm not sure if this maybe even will bring a lot more damage to dollar, maybe not just a free wave pullback like I mentioned on euro, but for now it looks like that this cycle is definitely changing, money going out of the dollars. Now let me just take a look what I have left to. Okay, we can look at the S&P 500. Now the S&P 500 is pushing higher. I see prices in a fifth wave. Now the first target of this S&P 500 is actually not far away, but more ideal target based on fee projection is 400 points higher. So looking at the daily chart, what is going on there? Well, we actually do not have we have higher highs, higher swing lows, but that's not a very clear or very strong trend from the last few months that I would love to see. Okay, to me it looks like a wedge that could be building a wedge here, this market. Okay, so if that's going to be the case, then maybe we sooner or later will approach the top. In fact, each time I have already been discussing about that in past webinars. Each time since start of 2018, always when market reached a new all-time high, okay, like here was the first time, market then just immediately put a top in and make a pullback, a deep pullback. Then once again we reached a new high here, new all-time high in April. It made a pullback. Again here in July we have seen a pullback. So I'm expecting something similar to happen here. I'm not not really convinced in any strong decisive break to the upside. I think that actually bulls can be limited very quickly. So ideally we will see bulls limited at this upper trend line resistance. So I'm looking actually at a possible ending diagonal formation here for a wave, now in a wave 3, expecting wave 4, then maybe another push to the upside. So this is a long time process. Okay, so from a trading perspective, not an easy part, especially not in ending diagonals, but it's very important if you are an investor, because you should be aware of maybe even very strong sharp reversal if this is going to be the case, because ending diagonals are formed at the top and at the bottoms. Okay, looking at the 4-hour chart. Okay, so 4-hour chart, I have been bullish for the last 2 weeks on the S&P 500, and I turned bullish as soon as I saw this bounce and overlap with this wave A, because I knew back then that obviously this drop from the highs cannot be count it differently than only in 3 waves. Okay, so this was my confirmation point. And especially this rise was also in 5 waves. So this was the first leg of recovery that we are currently tracking. And ideally, we are going to see a 5-wave movement, a 5-wave structure in this final piece, where I have it here, in this final piece of wave 3, okay? So once I see 5 waves up, I will already be aware of potential reversal. Now looking here at the hourly chart, we are trading out of this short-term Elliott wave channel, okay? If you just look at the blue cycles, it will be obvious that I'm looking here for a top or a completed wave 3 after this broken trend line, broken channel, and now we are back at this channel. Maybe it will be tested as a resistance, maybe some spike to new high to make an irregular correction, but then I would look for a wave 4 to move towards down towards this 2970, maybe 2980 supports, and then a new push to the upside, and maybe that's when the all-time highs will again occur in the wave 5.
Thank you, Grega.
Thank you, man. Hey, Dale, do you have an interview today?
Yeah, and
okay.
so you really gave us a nice rundown. I appreciate it, and it's always good to hear your work, buddy. And may
Yeah, I was going to
pips,
say thanks, Grega.
yeah, may pips rain down, bro.
Yeah, thank you. We'll see.
All
Okay,
right.
time will tell, like always.
Yeah.
And
Exactly.
thank you, Greg and Dale. Thanks for having me this morning. I'll see you guys tomorrow, and thank you, Stelios, for being here. And have a great interview.
Okay, thank you, Blake.
All right, see you guys.
Bye-bye.
Hello, my trading warrior brother, Peter Goodburn. I'm going to promote you, and I'm also going to unmute you. How are you, Peter?
Dale,
Welcome
can
back.
you hear me?
Yeah, welcome back, bro.
Great to
Oh,
catch up with you. Yeah,
yeah.
how's things with you?
Things are going okay, and interesting event. You know, I've read your work, and I think you were, in fact, I know you were looking for a high in the dollar. So, and I think your critical level that would confirm it, wasn't it 97-ish, Peter? Taking out 97, something like that?
Yeah, that's right. I think, can you see my screen okay?
Yeah, we've got it.
Okay, let's have a look at the dollar then. And yeah, you'll see what's going on. Yeah, there's we've had this huge sort of overlapping sequence since September last year in 2018. Here's the point here, and you can see it's a sort of yeah, well, I'm treating this as a diagonal. Slight problem because we're used to thinking that third waves, you know, in any 5-wave picture, whether it's an expanding impulse pattern where you get an extended sort of impulse wave, either 1, 3, or 5, or whether you look at a diagonal, we're used to thinking in terms that wave 3 should not be the shortest wave. But actually, if this is a diagonal, I tend to think it is. The third wave is slightly shortest, not much, but slightly, certainly on a logarithmic scale chart.
There's always a fly in the ointment.
But the thing is that Elliott never mentioned whether 3 should be the shortest or could be slightly shorter in diagonals. He was never that specific. And of course, we in the computer sort of age have got much more sort of data experience than he would have had because we can see a lot more stuff going on. So anyway, I'm a bit flexible, but the main thing was that you can see momentum loss every time you make a higher high.
Yeah,
you get a pullback, which breaks the previous high.
Momentum was diverging for a year.
Yes, but from an Elliott perspective, until 5 price swings are finished, you're not really going to be selling. But here we did get it up at this 99.66 level. It could have happened earlier here in September.
Does this take 102 off the table, which was also before this recent high, kind of a long-standing potential topping area for you? So that's off the table. And I remember from years ago, Peter, when I interviewed you, you had very low long-term targets in the dollar. So if this is a significant high, are we talking about what you thought we would see years ago after this dollar rally ran its course? I think 70 Dixie or something like that.
Well, absolutely, yeah, because I mean, we've got on the very long term, let's look at the long-term cycle and remind ourselves what that's doing. This is a very long-term cycle of the dollar. Actually, it's a 15.6-year interval. So that means that, you know, we're getting 15.6 years between the peaks and the troughs. And it's fairly centrally translated, which means that if you carve it up into half, you get about a 7.8-year interval, peak, trough, and this alternates. So the last major peak was late 2016, early 17 when the dollar hit here. And this is going down into 2024.
Wow.
So we've got, you know, a long way to go. And because we can see a very succinct corrective pattern from the pre-financial crisis lows, you know, when the dollar was down here at 70.70.
Yeah.
And we moved up to this 102 area. You know, that's a zigzag or a double zigzag. Well, we can look at it on the, let's see if I can get my long-term dollar up and we'll have a look at that.
Because, you know, Peter, and I know you do intermarket relationships. Yeah, there's a chart I was thinking of from, you know, I must have been, you've had this count for since I've known you. So, you know, and the dollar is so important for everything, you know, as far as nominal values and stocks and reflation for commodities. So, I mean, this picture that you're painting into 2023, I'm going to be paying $10 for a loaf of bread. What do you think, man?
Well, I think when
I'll have to have a garden or something.
Yeah, I mean, this is the next phase of the inflation pot. You know, this theme that I've coined, this phrase that I coined back in 2010, was basically to depict that when central banks start sort of, you know, putting the foot on their gas, we're going to see asset prices rise. Well, that's fueled, of course, this secular bull trend up in stock markets and equities, and to a certain extent, but to a lesser extent, you've seen it in commodities. The big difference between the stock market and the commodities relative to what the dollar's influence is the fact that when we started to see a peak before the financial crisis, commodities had already hit their long-term, their super cycle uptrends had finished from the Great Depression lows. So that was the orthodox peak for things like oil. And for things like copper, it was actually a couple of years before. And then it hit sort of ceilings in pre-financial crisis. So when you got this amazing declines going down for copper, I mean, let's have a look at copper on a slightly bigger perspective. When you had the declines coming in for copper from the financial crisis here, this was only the beginning of a counter-trend phase, which was in reaction to the long-term cycle, which goes back to the Great Depression lows. Yeah. And what we've detected is that this is unfolding into an expanding flat pattern. So in case anybody listening would like to know what an expanding flat pattern is, perhaps we look here and you'll see one. This is our proprietary software wave search, and I'm just going to select an expanding flat. And this is what it would broadly look like. You get an initial downswing like this, which is wave A, and then you pop up in wave B to a slightly higher high. So even if this is a major secular bull uptrend or a super cycle commodity uptrend that's finished in 2006, 2008 here, you're still capable of making higher highs at a later date as part of the correction, and then wave C drops down later. I call this an archetypal sort of three price swing expanding flat, but I call it the shock, pop, drop scenario. And we're still in the inflation pot. We're halfway through. And so if we take a look at what the subdivisions are in this big swing, so this low here would be the financial crisis low in 2009. So we've done wave A, we're trying to complete wave B, and we're already in wave C moving up. So over the next few years, this dollar decline is going to see asset classes just go berserk. They're just going to keep going up. and we're not going to see any secular bubble burst for another 2 or 3 years maybe. And so we're back to copper and looking at this going up to new record highs, something like this. This is the zigzag. This is wave A, this is B, and we're in wave C at the moment. And when you see the news headlines in the last year or more, and they start talking about sort of potential recession.
Very highly advertised recession before the fact. I've never heard it in the media before like this.
No, but the fact is that we're in the recession now. We're in the recession now. This is the recession. This is as bad as it's going to get.
Okay.
Because the recession, if you look at, I don't know if you've seen a lot of PMI studies, but I got a really good piece of data and charts from Market, this organization which is producing data points for PMI, and I ran through everything the other day, and it's an exact replica of copper. If you look at this, you can see all the economic PMIs. They all bottomed in 2008-9.
Right.
They ran up like this in sort of a straight line advance. So if you look at any PMI, I better not show it now in case of copyright restrictions, but if you can get your hand on any PMI, just Google it and you'll see probably tons of the stuff. You'll get this very archetypal pattern. You'll see a swing up, then you'll see a swing down as a retracement, and then and often in the PMIs, I'll show you what it is, slightly deviating from this, but not much. What the PMI will look like is that from this high in 2011, it's sort of like doing something like this. It's wedging like this.
And we're troughing now.
And you're troughing now. And basically what's missing, basically it's gonna have this big swing up, and nobody recognizes that. And everybody's saying, oh yeah, well, we've got a recession coming in because of the inverted yield curve between 18 and 24 months after the yield curve inverts. So, where we think that, if the yield curve is inverting now or has been inverting for the last 6 months slightly, then 2020 we're going to see a recession, and that's going to bring asset prices down. That's completely incorrect. That's completely incorrect. The recession is now. This is the worst as it's going to get. And what you're going to see next year is this next phase of the inflation pop. You're going to see all these PMIs go through the roof. You're going to see GDP start going through the roof, and you're going to see the dollar collapse. Basically, that's what's going to.
So, someone's being a little jaded. Gregorio says it's more probable, and let's make some news, Peter. It's more probable for Bitcoin to go to 100,000 than Dixie to go to 50. Maybe Bitcoin doesn't go to 100 grand, but I know you're very constructive on it. So, do you have $100,000 long-term target? There are people talking about that,
Yeah, well, I'm not a fantasist when it comes to trading, because as soon as you've been in this business for 40 years, or you begin to know how to separate wheat from chaff, and
yeah, sure.
And you and me have been around the block a few times, so whenever I see outlandish forecasts like that, I'm skeptical, generally speaking, because people, I know human nature, they get a bit overindulgent. And my big factors of being born in this business was in the late 70s, when I saw, I was trading silver on the desk. I was a market maker trading silver when Bunker Hunt and Herbert Hunt were going mad, and we went up to $50 then. And I was market making, and I remember some of my opposite number, the dealers, standing on the desk screaming for prices to offlay some of the positioning. It was a madhouse. It was like a small pit on NYMEX. It was going absolutely berserk in the office. And I've lived through that. I know what it's like. The next serious event that I wrote about was in 1989, was Nikkei topping out at 38,950. And I could see that, a lot of the investment banks, including all the Japanese houses, were talking about 100,000 Nikkei in the next few years. Yeah. And that was a pure extrapolation of what the current scene of that extreme sentiment, bullish sentiment, was in sort of the end of towards the end of 1989. So, 100,000 Bitcoin, well, I might surprise you actually now, because I'm just going to scroll to a chart that I've got here. And I haven't updated it for a little while. We're coming into a major low on Bitcoin, a sort of secondary low here. But this chart,
let me also say that 3,100 level, you were becoming constructive back then down there. And I remember that higher low we had in February and went with GBTC, which was it's a trust of Bitcoin.
Yeah.
So, that was a great call. And
thanks, Dale.
yeah, because I mean, the whole world was pessimistic about Bitcoin down there. And I think they're beginning to, just on the shallow pullback, say, that was just another flash in the pan, but you think otherwise.
No, absolutely. I mean, this was always going to be a correction. I know that, I mean, it's a hell of a sort of percentage drop, isn't it? You go from 20 down to 31. I mean, or 3,000 rather. I mean, this is a huge bite out of.
So what's that 5 of 5 up there? There's so many digits. Is that 500,000?
Well, that's $500,000.
Huh?
That's $500,000.
$500,000. All right, Gregorius, time stamp this. And when's that going to be? 2024?
Well, I guess probably, yeah. I mean,
okay.
I wouldn't put it past it. Now, this is obviously a logarithmic scale, and I like to work with logs. But I just wanted to temper everybody's enthusiasm before they saw this chart with the story about copper and silver in the past and the Nikkei, because I'm not a sensationalist by any stretch. It has to be something really important to convince me. But when I use the method that I'm using, particularly with fit price ratio studies and logarithmic scale charts, this is the conclusion. I don't know if it's possible. It seems outlandish in one aspect, but I've also learned to not ignore these things when the sequencing of the Elliott patterns converge with the fit price ratios I use. So anyway, that's I advise anybody to looking at this to use it with a pinch of salt.
Yeah.
The best way to track what we're doing is to subscribe to our. It's a bit of the pundits, but subscribe to our bi-weekly Elliott Wave Compass reports, because we do include Bitcoin short term on that, and this will give you an idea whether or not this is still on track or not. At the moment,
I'm really looking forward to shorting it at $500,000, buddy.
Yeah, I mean, why not? I mean, at the moment, I mean, the leverage is, even day to day, are so big that you don't need to treat this as a futures company.
Yeah, and it wouldn't take a lot of money flow into this, because, isn't that part of the reason for the argument of like juniors and senior miners, that the market cap of all of them put together might be IBM? So it's like, forcing water down a hose, and then you look at something like uranium, and it doesn't take any money to move it. And really, the market cap of Bitcoin could grow exponentially.
Well, in a way, I quite like Bitcoin because it patterns pretty well, and we know that the new NYMEX, the IMM contract came on stream. This is bringing in a lot of more institutional sort of platform trading, and it seems to have some of the idiosyncrasies that we saw in the pattern sequences going back last year in 2018 have been ironed out on an intraday basis. So actually, it's much better for speculators now, especially if you're in the Elliott wave fold, because the patterns short term are being tidied up quite a bit, and there's a lot of adherence to the conformity of the pattern integrity. So I like this very much.
Okay.
But looking down the pipe, yeah, you're right. I mean, if money comes in a bigger way, which I think it can do, then you're talking about explosive moves. Yeah.
Yeah, I mean, look, if the dollar index is going down there, people are going to be looking for something, and some type of dollar hedge. I wanted to ask you, since you went over copper and the recovery stage, do you still feel that crude has not completed its bear move? And I think your writings talked about when the S&Ps make a new high, that we'll get a lower high in crude, and then when we get a correction in the S&Ps, crude could finish to the downside.
Well, I have to admit that crude oil has been sort of like my nemesis. Because,
yeah, okay. Yeah, it has been tough.
Yeah, well, you see, if you look at the positive correlation between the S&P and the stock market, for example, and the crude oil, you know, we hit tops here. This is October. Of course, if you go back to October 2018, the stock market, the S&P topped out.
Right.
We had this drop down here into December, so all the stock markets bottomed in December. But of course,
it's broken down a little bit. It's been weaker than the S&Ps, right?
Well,
the correlation.
It's been weaker. There's still positive correlation on a day-to-day basis, but what you get is amplitude changes, and amplitude changes create pattern changes, at least from an Elliott perspective. So you've got a very different format. This, at some stage, I'm still convinced it has to break this old low back here in December before we can go up in a more systematic uptrend. And it hasn't done it. I mean, I was very intrigued last month in September when we saw that spike up because of the Saudi bombing.
Yeah.
And I thought to myself at the time, I thought, right, okay, this is going to be a real acid test now, because if we start to see crude oil break down from here, which it should, if this is a correction, especially in a second wave scenario from this diagonal downswing,
right,
then it should immediately drop down again. And it did. It performed exactly as it should have done. So I'm still very bearish for oil. I still think we're going to get this down. But winding the clock back a few months, when I knew that the S&P was ready to drop down from sort of April, May time, I thought that the two would bottom at the same time. It's clearly not the case. But what I can tell you is that if oil is going to drop down to these numbers, as I think they should, then we will have, obviously, a pullback in the S&P at some point, a correction. It might not be as big as we wanted it to be because the August lows look pretty solid now. Now, the reason why the lows in the stock market look pretty solid into August, not just from an S&P point of view, but particularly from a European point of view, is this. I'm just going to show you a chart I published in our reports back in back in July. This is the Eurostoxx 50, and here's the low. This is the low that you saw in December. Now, this is the oil low at $42.
right.
And then, of course, we start heading up in both oil and this as well. But this pattern is a five-wave pattern. It ended in May. Now, if you look at most indices, they all topped out in April, May time.
Right.
Even the S&P. But this pattern, at the time, we were looking at an expanding flat pattern, the same expanding flat that we saw earlier in this wave search model, something like this, where you drop down in 3 waves, you go up into a brief high, you break the previous high, then you drop down in 5. Okay?
Irregular.
Almost
like an irregular, right?
Yeah, it's an irregular or an expanding flat. You can, so you go up in B, breaks the high, drop down in 5 waves. It's very precise. So this is what we've had. 3 down here, 3 waves up, breaks the previous high, breaks the late April, May high, and then you drop down in 5. And this is the forecast that we should get down modestly below 32.42. We should break down to about 32.10, around that number. That's a minimum downside target. And of course, by moving down to 32.10, you'd comply with Elliott's guideline that retracements fall back to wave 4 preceding degree. Here it is, 3200.
Right.
So we're looking at that sort of downside target. Well, let's have a look at the Eurostoxx 50 now and see how it got on. Here it is here. Whoops, sorry. I need to reduce that one. And you can see here's the drop from wave C, and we had 32.10 and it got to 32.31. So it just took this out slightly, and then off we go again. So we know for absolute, with a high degree of probability, that this expanding flat fulfilled its requirement. And that's a correction to this December, May upswing. That's very, very bullish. And that's why you've seen progressive moves up like this since. So,
well, with the outlook on the dollar, Peter, does this mean outperformance of European stocks as the dollar continues to weaken just on the currency translation?
Well, of course, if you've got a weaker dollar, it would benefit the S&P more, you think.
Oh, okay.
But, because if you've got dollar asset, this is a euro asset. This is not a dollar asset.
Okay.
And the euro is increasing in value. But I have to say that if you work out the percentage increase from August up to here, this is a lot more than the S&P. This is 2 or 3% more.
Okay.
So this is outperforming at the moment. But the thing is, it has a higher beta. You see, whenever this market drops down, it has a higher beta, so it's underperforming. And when it goes up, it's outperforming. And I've been recommending to our clients at the moment, particularly our institutional clients, that they should be beta long of Europe, because actually Europe's been beaten down quite a bit because of the banks. And there are some banks in this. But the banking index in Europe is hitting a major low at the moment, or it did in August. And I would love to be, I think you should really be long of European banks. They're not going to go a lot lower than where they've gone already. So this is outperforming now. But the main point to this is that the expanding flat's finished. This is a major uptrend. So when you look at the S&P 500 and you want to extrapolate something similar, you're talking about here. Oh, sorry, that's the DAX. You're talking about a running flat pattern that unfolded during the same time period here into August. Okay, we never got below this low like the Eurostoxx 50 in August.
Right.
Okay, we bumbled around and we went up and down. And this is authenticating what we've seen in the Eurostoxx 50. It basically means that this correction to December's upswing is finished. And this is an overlapping sequence in the form of diagonal. This is probably going to have a little look up here in the next week. And then you're going to get that correction. And this correction down is where we've got to watch and see what oil does.
Okay. Do you want to, can we wrap it with gold? I'm getting a request from one of our attendees.
Well, right now, okay, gold is a bit of a Pandora's box. Pandora's box. Okay. Why? Well, first of all, you've got to, let's put up a gold chart. First thing is, what you've got to understand is that gold has a bullish and a bearish count over the intermediate term. And this is the bullish one. We've maintained it as a super bull market, which is basically continuing the super cycle uptrend, dates back to not only the Great Depression lows, but the cycle wave 4 low that you see from here in 2015. But I'm not so certain this is correct, I have to say, because at the moment, we've only got 3 price swings up from the December 15 low. And this measures like a zigzag. So if I now show you what the alternative to this very bullish count looks like, it might send a bit of a chill because
it's in, I know where you're going.
Yeah, let's have a look at, I think I've got it here. Yeah, this is it. You see, this upswing is also measuring like a zigzag. A, B down. Here's another running flat, similar to what we looked at in the running flat for the S&P just now.
Right.
Here's C. And we've already looked at the substructure from last August, as August 18, from 1160 up here, and it's 5 waves. So we've got potentially 3 price swing event. Now that could be 1, 2, 1, 2 in the super bullish scenario I looked at just now. But it could also be a zigzag, and if it is a zigzag, I think we could have an X wave over the next several months down here. That is supported by the cycles, because if we take a look at the gold cycle, it looks like this at the moment, coming down into March 20.
Into the spring.
Into the spring time. So I don't really want to be too long of gold at the moment, even though, I mean, I still get 5 or 6.
So maybe the depth of the correction, Peter, will tell you what count it is, because the other more bullish count, it didn't look like we got beneath the 13 40 or so, and on this count, we're sub 300. Okay, there you go.
That's right. Yeah, I mean, this decline could be very small. Maybe
Yeah.
smaller than I've even drawn it. It's
Yeah.
possible.
Yeah,
But
14.
for sure, yeah. I mean, if you got a small correction and then a big thrust,
Right.
I mean, the question is, would you follow it? I'm not going to follow that if it happens because of the cycle. I think the cycle is giving me what could happen is that there could be a subsequence in here where I've misaligned that, and it could have a little stretch a little bit higher and then suddenly drop. But I don't
Peter,
care. I don't
I'm
care if
sorry,
I
go
miss that. I don't
Yeah.
care if I miss that, because the cycle's telling me it's down at the moment, and this is a big risk now to be long of gold. If you haven't ridden this movement up already
Yeah.
over the last months, it's very tricky to be buying gold. The other thing that worries me is platinum.
Yeah.
And platinum
Weak.
is correlated to silver, and silver is related to gold. And I just show you platinum because I think this is very pertinent.
Do you get this question, Peter, when I say I had 3 ideas? Clients would ask you, well, Dale, what's your best idea? I would say all of them, because I don't know until I could look back in the rearview mirror. Do you get that question? What do you tell subscribers? Well, Peter, I mean, if you had to do something between getting long S&Ps or Bitcoin or shorts a dollar, what would you do? What would you tell them?
Well, I mean, when I have 2 or 3 counts, it's normally an expression of looking at probabilities. I've in my business, when I first started to trade, and we had to pick up the phones to the clients, these institutional clients who were trading huge volumes in the 80s and stuff. The main thing that you were told was that you've got to have a view. You've got to formulate a view. As soon as you walk in the office every morning, you've got to have a view. Is it going up or is it going down? And nowadays, people sidestep that. I always have a strong conviction for most things. But I have to admit that on oil, I'm much more cautious than I would normally be on things like oil and precious metals at the moment, these price levels.
Okay.
It was different some months ago. We knew that gold was going up. We could see
so
that.
Conviction vacillates based upon reassessing, right?
Well, it does, and it has to. You have to evaluate whether it's, things are still going to go up or not. This is our forecast back in June for gold. We knew there was going to be a bit of a dip after this thrust, and then it would go up to above 1,500, which it did. And since then, we've dropped $100. It's conforming to what it should do under those conditions. The thing that worries me is platinum, because, as I've said, platinum is related to silver in a positive way, correlation-wise, and silver to gold to a large extent. If, I'm not talking about amplitude changes over days, but if you get the bigger moves right, you'll get the other right. This is a big move down, which is projecting this diagonal pattern. And it worries me a lot, because that tells me that we've had, this is the peak in September when you saw the gold peak and silver peak. And it worries me that if this folds down the way I think it could, that's going to bring gold down a lot more than people think at the moment.
God, I remember the days when platinum always traded at a premium to gold.
Absolutely. And I'm going to get very excited about buying platinum in the not too distant future when this drops down next year, because if you look at the spread, and I've got one here, I think, yes, I think it's this one. Yeah, it is. I've updated this in our
look at that
reports
historic.
recently. Yeah, this is going back to the 70s.
Yeah.
And of course, what you're thinking of is this time period. This is when we were young men, and this was our heyday.
Where's the time machine?
Oh God!
All right.
But this is really huge discount now.
Yeah.
Platinum under gold, and at some stage this is going to bottom out. And platinum's going to be a fantastic buy signal at some stage. You just got to be patient. That's all.
Well, what a great interview again, Peter. It's always, I learn every time we talk from you, and gives me fresh material to process. And I want to thank you for coming in today. I'd like you to let people know how they could follow you, subscribe, why don't you show your website again?
Great, thanks, Dale. Yeah, well, this is actually the Elliott Wave Compass report. This is the interface from the login. You can go onto our website, which is wavetrack.com, and just go to the subscribe section and subscribe to Compass. It's $39 a month. You get 2 reports a week, and they're in PDF format, or you can go online like this, go to report, and you can view all the charts. The S&P chart we looked at just now, you can click on the thumbnail here, and you can download the report from here or look at it on this type of chart. And be happy to welcome any new subscribers. We have a lot of great things in the reports, and you'll learn a little bit about fib price ratios as well. And so, yeah, please subscribe, because we'd love to have you in our subscription lists, and I'm sure you'll benefit from it. Yeah.
Thank you, Peter, and have a great fall trading season. We'll pick this up in another couple months, and I appreciate your work and the insights you provide every time you're here, my trading warrior brother.
No, great, Dale. Thanks again, and it's just great to catch up, and we'll be in touch soon, hopefully. Yeah.
Okay, good hunting. Good hunting, Peter.
Thanks, Dale. Thanks again. Thanks for
all right,
inviting me.
everyone. That's a wrap. Getting a pretty good reversals in S&Ps right here. So enjoy the rest of your trading session, everyone. See you in members chat. And remember, don't just count your pips, count your blessings. See everyone to wrap things up tomorrow. Adios. You're very welcome, guys. See you, Monica. See you, Brock.